Hey everyone, welcome back to the channel. So in this video, we're going to take a longer term approach at the HEX markets by looking at things like monthly charts as well as entire years in review, when obviously we've only had one entire year, but comparing the beginning of January 1st, 2020 in ROI standards, comparing 2020 and 2021 in terms of their normalized ROI from January 1st. We'll also look at the bull flag that we could be confirming within the next hour or so, holding exponential support. So all of that and more, right? If you like this kind of HEX quantitative and technical analysis hybrid approach, make sure to leave a thumbs up. Subscribe if you're new. Thank you so much. We're almost at 1,400 subscribers, so let's get there by the end of the month. And with that said, let's go ahead and jump right into this analysis. All right, so we've never really looked at monthly charts for HEX, and here we go for the first time, okay? And it doesn't take too much analysis to really look at, a pattern here. And I'll point it out for you real quick. So I'll unhide these drawing tools so you can see what I had prior. Okay, so what are we looking at here? If you look at this region over here, once we closed above the prior all-time high candle, so to speak, on the monthly, we had specifically this candle right here. Look at that. That looks bearish. That looks pretty bearish. It's a, sort of a, what is that? Like a 50% candle with a huge 100% wick to the upside, right? So this could be considered a very bearish candle, but what do? We went ahead and filled that entire space of wick, that sell pressure space, with a full ass body, and then after that, it was off to the races with this, obviously, this incredible month, which put us in at a 10x and took us to this new sort of paradigm, right? We hung out around this previous paradigm around 3 or 4 months, right? And then same thing happened over here, right? Once we finally crossed our all-time high candles, we'll consider them to be this one here around the 4.5%, or what is that? I'm sorry, almost half a penny, right? This region over here, $0.0042 and $0.0045. And so once we closed above with these candles, as you can tell, closed above this candle, the body, right? That's what I was trying to say. So once we closed above the body of these all-time high candles, after consolidating in this prior regime, in this regime for about 1, 2, 3, 4, 5 months or so, then we went ahead and we didn't 10x like over here, but rather, I mean, if you count from wick to wick, yeah, sure, we 10x, but more so if you count from all-time high to the next all-time high, it's about, about a 5x or so. It depends on where you measure from, right? And again, I'm looking at something similar, right? Could this be a fractal? And there have been fractals that haven't played out in the past that, I thought were fractals. So this isn't a for sure thing. It never really is. But I do want to point out, I'll erase this for a bit just to make it cleaner. I do want to point this out, this candle specifically that we're in right now, because it looks really similar to this candle here that's considered a bearish candle, but it has similarities in the fact that it came after a consolidation region, right? This sort of, I guess you could call this consolidation on the monthly, because it's kind of just chop reaccumulation, I guess. And then we had this sort of candle which looks bearish because it has this, this body down here. It's not a 50% body like the other one. It's more like a 20% body. And it's not 100% wick to the upside, reduced volatility, you could say, but rather more so something like a, 50% wick to the upside. And so might we not see something like this, like a 20, 30x, 10 to 30x? Maybe not. It might be a little more conservative, maybe a 5 to a 10x from here, which would still be really, really nice, right? Put us in the 8, 15 penny region. Now, that's the whole reason why I had drawn these regions prior, because just to go over it if it wasn't clear enough, you have this sort of consolidation, this regime, so to speak. Once candles start breaking prior all-time high bodies, then we're off to the races, similar to over here. Once candles start actually breaking these all-time high bodies, then it's off to the races and we enter a new paradigm, new regime, whatever you want to call it. And again, I see something similar happening here where our previous all-time high candles, I guess you could say, were actually over here in this region or so. So we've never really consolidated within for too long. Like for example, this candle I was pointing out here, like you can consider these two candles, I guess, transitionary candles, right? Over here, we didn't really have many of those. It was kind of just a lot of volatility near big payday. But over here, back in February 2020, March 2020, you could see, again, similar looking candles and the same thing here that you have sort of, it's in between this tolerance, so to speak, of where your all-time high candles actually are. You could even draw this like over here on the wick, I guess, but we're mainly talking bodies of the candles. So all I'm really trying to get at in super simple terms is something like this. Like you have this accumulation region, and then once you break all-time highs, pop off. And then again, you have this sort of accumulation region. Once we break all-time highs, pop off. And then this again, you could consider some reaccumulation. We're breaking all-time highs, pop off. So it's just sort of like it just stair steps up on the monthly, or that's what it looks like, right? Again, it looks very clean in my opinion. Even if I had it drawn the way I did over here, right, then it generally looks really good, right? Because this is actually the highest candle we've ever closed, if you think about it, depending on where the month closes, which, I'm filming this, it's 4/29, right? It's April 29th, and so we have like a day or two until we actually get the monthly close. But if you look at this, the bottom of this candle is in the, the 1.5 region, which is very bullish in my opinion, right? Highest candle we've ever closed, if you think about it. So things are looking good in my opinion. Could this be the region before we have a pop off from here and do another 10x or so? Potentially. That's why I'm making this video. And again, we're looking at a longer term approach in this video, so I did want to cover this as well here, kind of the entire year of 2020 in review. Okay, and so this is essentially looking at normalized ROI from January 1st of any given year. For the green curve, we have 2020. Here in blue, we have 2021. Obviously, it hasn't performed nearly as good as last year, same season, but you have some similarities, and I did want to point that out. Obviously, different market conditions, but after we had this run up here in 2020, and you could say we had, a 50% dump in 2021, we had these local peaks in the same region, which I find kind of interesting, right? We had it on day 57 of the year in 2020, right? So about 2 months into the year, probably late February. And it took us up here to 5x region. This was kind of a relief rally. I guess the B wave of this ABC correction that we pointed out on Twitter. But again, this came at around day 61, so about 4 days after this peak. What is that? Almost 10%, more so like 6-7% slower this year. And then you look at this sort of bottoming out reaccumulation, and look at that. We had our day 90 to day 120 rally, similar to last year, right? And this local peak was around, or this first peak, I guess you could call it, was around day 104. And here, this year, it's around day 119. So what is that, like 10 to 15% slower? So could this just be a slower year in general? It could be. And it makes sense, right? Diminishing returns, reduced volatility, all that stuff. It's just the fact of markets. And so just zoom out and look at 2020, right? We had these local peaks of around 66x, 65x, 150x, 100x, and we ended the year at a pretty 148x, okay? And if you count the wick, that took us even higher than, well, it was even higher, okay? And where are we now? At a measly 1.11x from January 1st to today. So even if we do have diminishing returns this year, we did 150x last year, boys. So diminishing returns, even if we just perform half as well, a third as well, a quarter as well as we did last year. What a quarter, being very conservative, What would a quarter put us at? 37x by the end of the year. You know what I'm saying? 37x from 2 pennies, which is where we started, 1.5 pennies or so. That puts us at 50 to 74 cents. You see what I'm saying? Like, even with diminished returns, and that was a mega conservative estimate, right? If we put in, let's say, half of the gains we put in last year from January 1st to peak of the year, then that's what, a 74x, which would put us closer to $1 to $1.50. So, and that, that would put us at around just over here, right, on this curve. So not even reaching prior overperforming ROI from normalized to January 1st regions. So that's a good segue to let you guys know that I actually ordered a new microphone the other day, and it will be coming in, I believe, in 2 days or so. So that'll be pretty cool. My hair's a mess. But yeah, so we looked at the monthly chart on HEX. We looked at normalized ROI from January 1st for 2020 as well as 2021. And let's look at, let's zoom in a little bit and look at what's going on now, because we have been covering this bull flag for a few days, if not over a week. And look at where we are now, right? I was mentioning it's probably not the best idea to try to, make any predictive models while we're inside this range-bound falling parallel channel, and probably not want to trade it until you see some sort of breakout to the downside or to the upside. And lo and behold, we had our breakout to the upside. It actually wicked back down for a minute back into the channel, and I had already tweeted something out, but luckily, universe is on my side, and it kept going, right? So we had this pump outside of this falling parallel channel. Keep in mind, this is a 6-hour chart. And then it looks like within the next hour or so, if we close this candle here, it could be nice, right? This could be confirmation of our bull flag that we've been looking at, which if you look at the video in which we talked about it first, I mentioned a potential breakout, and our target region was around the 3 pennies region, right? So if you take, from the end of this mini reaccumulation zone that lasted about 2-3 weeks to the top of the local peak, you consider this your pull, and if you place it at point of breakout, then you get your target. So it's about 3 pennies or so. So if we zoom out a little bit, say let's look at the daily, it still looks good, right? If we close tomorrow, what is that from now? Less than 12 hours from now. So if we close the candle above this 1.55 penny region where we are now, and maybe even start trending higher, then I would say that this could be the start to the journey to 3 cents. And will we see it immediately? Probably not. I mean, for example, this pull to peak took about a little under a month, right? About 27, 28 days, so about 4 weeks. So we could maybe see it, all of May be a good month, for example. And until the end of May, maybe we start seeing another little correction. But again, 3 pennies is our technical target. Remember, previous times we've had technical targets, like with ascending triangles and that, we've actually gone on to overperform those technical targets by, I think, 2.5x was one of them specifically, right? So let's take a look at, I mentioned this in the past, this ascending triangle right here, our technical target was around 0.007, and we went ahead and more than doubled that. So if we did something similar and doubled or more our prediction of 3 pennies, and we'd be looking at 6 pennies or more. So now you start seeing how things can start getting quite bullish quite quickly, and then you have that 10 penny region as a sort of psychological level. So that's our bull flag. I believe there's one more thing I was going to say on this bull flag, right? It could potentially be during May where we actually start breaking and moving up to the 3 penny region. Oh yeah, I was saying it might not happen tomorrow. It might take 30 days. It might even take longer, right? So we don't know, but 3 pennies is a technical target, as well as we've way blown past technical targets in the past. So we'll just have to wait and see. So with that said, we're still holding exponential support here, depending on how you draw your curve. And just a little Easter egg, I guess, Bitcoin dominance is dropping like a rock. So that's generally pretty good for Ethereum, altcoins. It should be good for, ERC20s in general. And yeah, with that said, if you enjoy this kind of content, make sure to leave a thumbs up. Subscribe, because it's the end of the video. So if you're still watching by now, definitely be subscribed. And with that said, I might be going live on Sunday. So nothing's confirmed there, but if my microphone arrives in the next few days like I anticipate, then that should give us a nice setup to go live on Sunday. And I will, once I have a little more details on that and more clarity, more certainty on times and whatnot, I'll let you guys know who that's with and at what time and all of that good stuff. So again, appreciate you watching, and I'll catch you in the next video. Peace.